Have you ever wanted to invest in things that are a little bit more alternative? Our business is multifamily investing, and that's really our bread and butter. But there are a lot of great assets that are outside of that sphere. And my friend Keeley Hubbard basically has been doing this with vineyards for a period of time, and they invest, and there's some real advantages to investing in it. It's a very unique asset class. And as we'd say, she gets to enjoy the fruit of her labor by having a vineyard. So I can say these bad jokes on here because it's because I'm a dad and I have good dad jokes. So anyway, Keeley, how are you doing today? Welcome.
I'm doing awesome. Thank you. And I love dad jokes. One of my dad's favorite ones is the juice is worth the squeeze. So there's another one for you.
Well, the funny thing is, I know your dad. I could totally see him. I may have actually heard him say that. I think I may have actually heard him say that. So that's good. Well, hopefully this interview, I think the juice will be worth the squeeze because there's a lot of good stuff there. So let's talk about this. And it always amazes me, like when I get into passive investing, I always think about it's really important not just to look at whatever you're investing in, but what does it do for you, right? Like real estate is great, multifamily is great. I know you have a multifamily background as well. You do multifamily investing, but when you find things that are a little bit outside of that, and there's some things that like we do the ATM machine fund where it's a high cash flow deal, it's less appreciation, but more cash flow. And so there's everything kind of has its own investment profile. And I think for every passive investor, everybody's interested in getting involved in real estate, you have to look at, well, what is it you're really looking for? Are you looking for returns? Are you looking cash flow, appreciation? What's the time horizon? What are the risks? And so I want to take this time, and I love doing this, where we talk about really, for us, new asset classes. I imagine most people listening to this have never invested in a vineyard, but maybe there is one is like, I've invested in a vineyard. So that's you. You can reply privately or put that in the comments. But talk to us a little bit about the story of this, kind of how this started, what it is you do, and how does one get invested in vineyards? That's really unique.
Yeah, well, this all came about, like you mentioned, my dad and I have got a multifamily background, and we were on another podcast, and they asked my dad, what do you do for fun? And my dad was in the process of buying the family ranch and wanted to run a calf cattle operation, and he mentioned that he wanted to put 30 acres of vineyards on the ranch. And it doesn't pay for the ranch, but it makes the land payment. So you don't make a ton of money off of it. It's not going to be a huge payoff, but it'll make the land payment, which is the goal of it. And so this guy heard my dad say that, and he'd been looking around and looking for a partner for a while, and his name's Mason. They're vineyard operators here in Texas, and they've got their own 350 acre block. They're running their vineyards here, like California runs theirs. So the only operation in Texas that's fully mechanized instead of hand labor, but they wanted to expand and didn't know how. They'd never done, the raising capital piece, the syndication piece. And so, he called me, my number was on the website, and he was like, hey, you don't know me, but I need to talk to your dad. And I was like, okay, a lot of people want to talk to my dad.
Okay. Yeah.
Right. So I connected him, and, 2 years later, underwriting and putting it together, and we launched the first block, the first capital raise last year. We did 290 planted acres. They're actually getting planted in the next month. All the steel's getting delivered right now, and we're about to launch into the next 300 acre block. So
wow. And you showed me, we were at a conference recently, and you showed a picture of one of these giant tractors that's kind of pretty automated, and it does like the whole thing. It like talks nicely to the the vine, and it powder. I mean, it just does everything, right? It does all the stuff, and it tells exactly, it's like AI technology and really, really unique stuff. So let's talk about that a little bit. Like, so what is it like? Just give us an investment overview of, what does it look like? Obviously not any specific deal, but generally, what should someone expect when investing in a vineyard deal? Can you give any sort of like, without, again, not a specific deal, but any sort of return expectations, just a ballpark, just so people can know like time horizon and ballpark, and maybe any sort of risks or factors you consider when going into a deal?
Yeah, absolutely. One of the challenges for a lot of our investors, as I'm sure you hear as well, is when you're in multifamily, you may be in a 5 or 6 year term, but it may flip early. Like we just sold one of our acquisitions 2.5 years into it, and it was a 5-year project. So now investors are left with, where do I put this money? Right. And so they're constantly flipping their own money. And, the way that we position this with our investors, and they appreciate it, is this is the piece of your portfolio that's the legacy play. So it's a longer term horizon. Like I mentioned before, the juice is worth the squeeze. It does not cash flow for a while. Vineyards are not annual crops. So you have to really make sure that the first 4 to 5 years, you're training the roots, you're training the vines up on the wires, and you're building a really strong root system, because that vineyard is going to produce for 25 years. So you have to wait, right? But the juice is worth the squeeze. So it's a 10-year term. Our investors are experiencing about 200 to 250% return over 10 years. But the piece that I think that attracts them the most is the legacy play on it. Because after that 10-year term, the vineyard's still producing up to 25 years before we start replanting. And we've got contingency plans for replanting as well. But it'll produce, 15% a year, it'll cash flow for them, for year 11 through year 20. And year 20 is when we start, replanting. So it'll drop a little bit years 20 through 25, maybe 10% a year, but it has that legacy play, which is
that's where that is very different. Yeah, that's really interesting. So most syndications that we do in multifamily, we typically see kind of a 4 to 6 year projection. A lot of those are selling early, in 2 to 3 years. But this one it sounds like it's a perpetual hold. So you basically, the goal is to get your money back within a period of time. But then after, the years 10 to 25, it just continually is something that you own. That is really unique. So someone, I guess, would look at that and say, hey, I'd be interested in doing this because it's diversifying and I can own some land as well. So let's say there is a higher and better use for the land. You own the land, or there's new development, or all of a sudden these fancy, wineries go all around or something. Maybe that becomes much more valuable, and you decide what you're going to do. Is there a chance that you do sell it in the next 10, 15 years, or how does that work? If there's just an offer you can't refuse, is it sold, or how does that work?
That is one of the biggest questions that we get, and we've talked about it, as just a leadership team on this. The reality is, if a company was going to come in and buy us, like a Gallo Constellation, a big California winery, they would want at least, a couple thousand established acres of vines. And so it would have to be an incredible offer, because they're cash cows, and it produces so much every single year that it would have to be out of this world for us to say yes, because we plan on replanting starting in year 20 and keeping it going.
Okay. And is it pretty sustainable? That I know there's the issue now with soils. I hear about the organic farming and all the stuff that our soils are terrible now, and we did all these fertilizers and things to it. Is this something that you can sustainably do it kind of indefinitely, or is it okay?
Where we're growing. So these are ground up vineyards in Texas. And a lot of people don't realize, like, Texas, why are you building? Texas is actually the 5th largest wine grape growing state, and it's a $13.1 billion industry. So there's a lot of grapes being grown, and where we're growing is called the High Plains AVA. It's right outside of Lubbock, Texas Tech University. It's about 45 minutes outside of Lubbock, but it's the ideal climate. It's got great soil. It sits on top of an aquifer, so we have plenty of water, but it's not pretty to visit. It's not your hill country winery. It's just very flat, a lot of crops. It's the perfect grape growing environment.
So you were sharing, this, I had to get my head around this a little bit, because I'm not, I drink wine occasionally, but the idea of a vineyard and a winery. A vineyard is the land itself, and you're actually growing, and a winery is where people go do tastings and they actually maybe do the bottling. Is that right? So those are two different things. You're not doing the winery, you're doing the vineyard.
No. Vineyard is a fancy way of saying we're grape farmers. It's better for marketing. Vineyard. We're growing grapes. That's what we're doing.
Yeah. So you're wearing overalls, and you hike up and you're standing in the grapes and you're squashing them with like one foot in the other, and they're a little more advanced than that. But
a little more than that. We're flipping buttons on a grape crusher.
Exactly.
Yeah.
I know there's some fancy machinery you guys had. It was really impressive to see some of that. So how does one, and this is actually a really interesting question for anybody who invests passively in anything, that's a new asset class, right? Because for most people, let's say 99% of people hearing this or watching this, unless they're fans of you and they've already invested in your stuff, it's going to be a new asset class. So how does one go about kind of vetting a deal in the vineyard space, and how would it be different than what you'd be looking at for a multifamily deal?
I think that, well, obviously it's agriculture, right? So even I'm learning so much in this space, like due diligence, the difference between due diligence in the ag world versus a multifamily, but it's having a very skilled vineyard operator, because there's so much science that goes into this. Our partner, he's a lifelong generational farmer, and he spent 3 years studying in California with the big wineries to understand exactly what they're doing and how that can be brought to Texas. But it's so much of it is soil, nutrients, and understanding the science behind it. So I think it's crucial that you have somebody that's been doing it for a long time. With that being said, we've also got California consultants, grape growing consultants, and we have Texas grape growing consultants as well. So we're never, just blinders on. We want multiple opinions as we send things to the lab and make sure that we're selecting the right land. And obviously we're giving the vines the right nutrients to make sure we hit our harvest targets. So that's one of them, is the vineyard operator for sure.
Right. Yeah. So yeah, we always say like it's the deal itself. Look at the deal, but look at the operator. So who's the operator? And and other times too, we say compare it between other deals. But I honestly don't know of any other vineyard operator or like syndicated. Are there other vineyard groups that syndicate stuff, or is it more REITs, or how do?
Yeah, not in Texas. And the reason for that, I mean, Texas is so far behind in grape growing compared to the demand. So a lot of the grapes are coming in from California, and that's what a lot of Texas wineries are trying to close that gap, is they want Texas grapes. So there's really been nobody that has stepped out there to do it, because a lot of these farmers are old school. They're ultra premium grapes. So they're hand harvesting, they're hand pruning. To just kind of step your foot or dip your toe in the water, we'll say, to get a big operation like this going, it's a minimum of, $7 million. So it's not, you can't just say, I'm going to try it out for a year. It's a lot. So there's really nobody else in Texas doing it, but it's a great opportunity for us and our investors because of it.
Yeah, it's interesting when you find there's certain asset classes that there's not a lot of access to for retail investors. And so when there is an opportunity to get in, it's really unique. And that's the amazing thing about syndication, is that you can really syndicate just about anything. I mean, you could syndicate a business. You could do it with different types of assets. You could do it with, intellectual property, or there's all kinds of things you can syndicate. So it's really cool to see you doing that. So yeah, for you, let's talk a little bit about your multifamily background, because I know you've done a lot of multifamily deals. You've done a lot of you train others to do it. You're a part of, Mark Kenny is a good friend of ours, and you're part of his group as well. So done a number of deals with Mark. And tell me a little bit about kind of how you got started in real estate investing, and kind of how you got here, because you've obviously, there's been a lot of steps to so somebody listening is like, well, how would someone do that? Give us a little like background of like your kind of how you got here, maybe some of the things you've done to get here.
Yeah, my dad and I have got a financial market background. So I was in the financial education space for 17 years. My dad was on the trading side, hedge fund, managing money, professional trader in Forex, futures, options, stocks, you name it. So, we've been through these market cycles. And several years ago, we started realizing, my dad's the one that he's able to see things before they start happening. He's like, these are not real markets anymore. And he couldn't achieve the returns that he was making for his clients. As the markets became more and more inflated and artificial, would probably be a word we could use. But because of that, he's like, we need to get into hard assets. And so we started looking at multifamily. Obviously we believe in mentorship. We believe in coaching. We could not have done it without somebody who's been there before. We knew if we wanted to play in the big leagues, we needed a partner. So we found Mark Kenny with Think Multifamily, and he's been instrumental in helping us become successful. And we actually closed today on our first acquisition that we purchased 2.5 years ago. We just sold it today. So
wow, congrats.
Yeah, it's been a fun journey, but it's like you mentioned, you can syndicate anything. And once we realized that, we started trying to fill the gaps of what do our investors need. So we've got some other projects in the works that we're going to syndicate that's not vineyards and it's not multifamily, but it's fun to look at that model.
Can you talk about it, or is it all like kind of back in the shop right now and you can't quite talk about it yet?
Somewhat. I'll say it has to do with land and timber.
Okay. Yeah. Okay. Nice. Okay. So you're building tree houses in the desert. Got it.
I love that. Yeah.
Darn, that was my idea. I was kidding. No, I think, you gotta have fun with what you're doing. It is amazing though, too. I think a lot of times I just had lunch today with a friend who has another business, and people always wonder, like, how did you do that? How do you get to where you're raising, millions, tens of millions of dollars, and you're doing all this, all these deals? It's just amazing how, like, there's that saying that journey of 1,000 miles begins with a single step, right? It's just like putting one foot in front of the other, getting in front of the right people. We say it's like in our real estate meetup we do in LA, we basically say it's networking and education, right? It's the people that you're around and the things you learn from them. And it's also the education that comes from the front of the room, or other sorts of, not necessarily like going to school, but you can be going to school just by learning from people. So I think that's really huge. And tell us a little bit more about your background. I know you have, you also do some other stuff where you help sales professionals, and maybe you can kind of talk a little bit about that. And how that's helped you to be able to raise more money, or to be able to understand, even you talk about the mindset and kind of what people are looking for as investors.
Yeah, well, I have a sales background. So I've been in sales for 17 years. Absolutely love it. I built my career in the financial education space, and was a VP of sales for a company that I'd helped to build to 220 million a year. So
Wow.
it was a lot of fun, had a lot of teams, traveled a lot, and just got really tired of traveling and, building somebody else's empire. And the further that I climbed this ladder, the further away I got from my passion, which was coaching my salespeople and being able to see a direct impact on their lives individually. And, you start getting into the executive level, you're looking at spreadsheets all day and working with the analytics team. And so that was my passion. So I left and I started my own coaching business. So I coach primarily women business owners, but I also coach some people in the capital raising space. And I know I've been successful because I can't stand typical salespeople like most people, right? Sales has such a negative connotation to it. And it's all the bad behaving salespeople out there. And a lot of people, I think, in this investment world want to start an investment business, but they're like, I don't know how I'm going to raise capital because I don't want to talk to my friends and family because I'm going to come across as pushy. And I hate that too. So I've just got a very authentic and unique approach that I like to call them disarmingly honest conversations with people. And that helps investors take their walls down and realize that it may or may not be the right fit, and that's okay. But I've really been able to use those skills in this world and build an investor community that truly loves to be a part of what we're doing and never feels like they're being pushed into anything.
Yeah. It's amazing how I have a sales background as well. Just amazing how that's really helpful. Everybody knows kind of the used car sales experience of you look great in this nice 1972 Buick, and it's really more like just telling you what you need versus somebody who actually will listen and say, hey, well, tell me about what your problems are. Tell me what's going on, or even help identify a problem that they don't know they have. Like somebody comes along and says, hey, do you know you can improve this area of your life in this way, or you can do this certain thing, and would that be a value? And it's somebody who is really helpful. And it's amazing how when you operate from a high trust standpoint, how it leads to more business. Even if you're just referring business to other people, the person who gets the referral could refer business to you, or maybe the investor just says, hey, this person, they just helped me for an hour and they sent me off to somebody else who like is a competitor. Like that's really amazing. Like that's a really trust building thing. And so it's one thing that I've loved about not everybody in real estate, but a lot of people in real estate. There's a lot of that abundance mindset that's just, hey, how can I help and how can I do other things? And so for anybody who is interested, we have a lot of folks that are passive, but maybe are interested in being active. You kind of shared a couple that you have some sales stuff, and you also have done a lot of kind of business analytics and consulting and building a business. That stuff is directly applicable to doing deals. It's all just, numbers and cents and dollars and how do you make it work? How do you make the business plan work? So I think that's really great. Let's touch base a little bit about kind of where you see things are at right now. Obviously, we've printed a lot of money in the last few years. We're at a time right now, the inflation rate is continuing to rise. Single family mortgage rates are rising. We're not seeing it as much in multifamily, which is really great. But where do you see things kind of headed? Do you think things are going to continue to go up and up? Do you think we're headed into a recession? How do you think asset prices will hold in relation to multifamily or vineyard stuff? And I don't know if you have any thoughts on that.
The crystal ball.
Yeah. What's your crystal ball saying you? Is it like the magic 8 ball? My sources say yes. That's all.
Oh my gosh. Yeah. My dad has like programmed me. He's like, anybody thinks they can predict the market. And this is coming from a trader for 25 years, professional trader. He's like, they're out of their mind. Because he doesn't pick the top or the bottom. He's just all about mitigating your risk. Don't lose money and grab the meat in the middle. And I think like right now, as everybody's feeling, it's feeling a little risky if I were to have all my money in stocks, which a lot of investors do, which I think is why they should be looking into hard assets. But I do believe that no matter what happens, if we do head into a recession or another 2008, people need somewhere to live. And, we may have apartment projects where we had a big plan to do a value add and a refi, and it may just be a long-term hold and we're just maintaining occupancy and we're cash flowing, but at least we're not losing money. At least we're not getting cut in half in the stock market. So I feel like multifamily is going to be around for a very, very long time and a stable investment, regardless of what's happening around us. The vineyards, people drink. They drink when they're happy. They drink when they're making money and they're wealthy, and they drink when they're not. So, the wine industry continues to boom, regardless of what's happening in the markets. But a lot of the wineries that we're going to be supplying bulk grapes, because a lot of these wineries want to lower the cost of wine. A bottle of wine that you could get in the beautiful state of California, that's a nice bottle for $15 is going to cost $30 in Texas, because A lot of these, grape growers are hand harvesting and a lot of labor involved, and they can't sell their grapes for any less than what they're selling them for. So we really want to come into that market and, help these wineries create a really good bottle of wine, at a lower price point. So I think even that's going to help regardless of what happens if we do go into a recession. I don't think people are going to stop drinking. I do know that.
Yeah. They probably drink more. They say during recessions, when money's spent on entertainment, I also say probably alcohol or other things probably would go up. So I think that's very true. And I think that another thing too to look at is just the demand of whatever asset that you're in. And so multifamily, we've heard the stats somewhere between 5 and 8 million housing units short in the US right now. So we know that's going to continually, they're getting more and more and more. They haven't built enough and there's just continual shortages. So we know being there, especially workforce housing, is going to be great. And like you said, with Vineyards, and I love that you guys are in that space, that there aren't a lot of other players doing what you're doing. And who knows, maybe you'll start up more, or other people will do the same. And then you're like, oh, hey, look, we helped start this asset class for retail investors, which is exciting. So what are some tips that you have for people that are new to all this, or new to, maybe I've had a rental house, or maybe I've just done stocks, like this all seems like a lot. Like, how do I start learning about passive investing, and what are some things I should do to educate myself?
I think it's listening to podcasts like the one that you've got, Bronson. It's getting involved in the industry, meeting other operators, learning the terminology, because the truth of the matter is, and you know this very well as you've vetted a lot of operators, looked at a lot of deals, anybody can make the numbers look good, right? A spreadsheet can tell whatever story you want it to tell. So you really have to dig in and have a deeper level of knowledge to know what to look for and the right questions to ask. And I always say, maybe because I'm a woman, I know that we're gifted with intuition, but I always say, trust your gut. And if you have a gut check, don't invest, right? Like if you really trust somebody and they've proven to you that they're trustworthy, and you like them and you feel that sense of trust, follow it. Because I think we can all think about investments we've made in the past where we're like, man, I knew something was off. I felt it. And if we had followed that, I know this is not concrete. And if engineers are listening, they're probably like, this is not detailed enough and concrete for me to make a decision. But I'm telling you that you've got a ton of knowledge that is built into your body and your nervous system that's going to tell you if something is the right fit or not. And if you just feel off when you're watching a webinar or something about the lead sponsor, I would say there's something off, and to trust your gut, but know the right questions to ask at the same time.
That you brought up a really good point. I think that it is very applicable to what we're talking about, because a lot of times the numbers, everything kind of checks out, everything makes sense, but there's this feeling of like something just doesn't feel right here. Something like when they talk, like I don't like something about this, or you can't quite put your finger on it. And I think it's really important to pay attention to that. I think not just in investing, I think especially in investing, but especially in life and the people we associate with, are just paying attention to that, because that information, like there's this book that came out by Malcolm Gladwell called Blink. And it talks about like this study where they had people view like a 30-second clip of a teacher teaching with no sound, just a video of it. And they said, rate how good the teacher is. And they gave a rating or like a review on it. And then they asked the people that were in the class the entire semester to rate this teacher, and they were almost identical, right? So like just even having a small amount of information, so the sense you get when you're around somebody, the sense that you get when they talk about stuff, if you have some sort of pause on, something doesn't quite feel right here, or something doesn't, like, it's really important to pay attention to that. And I don't think enough people talk about it, because it's all like, this world's a lot of like, like you said, engineers and not dollars and cents and this and that. Well, here's what it is, whatever. It's like, well, no, I think that like, does the business plan make sense? And, does this person, you feel like you would trust them if you just saw them on the street, or if you were in an emergency? And I think those are things that are really important to pay attention to.
Yeah. And if what hit the fan and everything went wrong, are they going to do the right thing? And are they going to do the best they can by their investors? I think that's key. My dad, has said this before, and I've really understood it now. He said he'll never do business with somebody, like go into a long-term partnership with somebody who's never lost everything, because he doesn't know what type of person they're going to be in that type of a situation. And somebody that's been through, a catastrophic financial loss or had to rebuild. I mean, my dad's an entrepreneur. He's owned 6 companies, and one of them, he went belly up when I was a kid. And I know who my dad is, and our investors know who he is because of that. and we could bring them an investment and they'll say, I'm in, before we even tell them what the returns are, because they know what type of man he is. And I think that's so important when you're vetting sponsors. And there's no rush, it may look like there's tons of deals. You're not going to miss out. Don't rush it. Get to know people.
Yeah. Sometimes we feel like it's you only have this shot, and it's just if you don't do this, there's only it's like, there are other, like, it's like when you're at the, the home plate and you're swinging and you're at bat for a baseball, game, and you're swinging, and you don't have to swing at every pitch. You can let them go by, and you can just literally let pitch. It's like, you're never going to like strike out, or you're never going to, you just kind of like wait for the right one. And that's the amazing thing about all this is I call the financial, it's almost like a big game you're playing. And Tony Robbins talks about this too, the idea of like, you're playing this financial game and the rules are continually changing and things are moving and there's new information all the time, but it's just like this game, and you have to continue. You don't have to swing at everything. You don't have to go for everything. And we can get shiny object syndrome. We're like, I'm going to do this. I'm going to do this. I'm going to be, and it's like, I think we've all experienced that, right? We're like, I'm going to be a flipper. I'm going to do wholesaling. I'm going to do that, whatever. And then you kind of realize like, now it's like, no, like for us, like we only buy large multifamily, 100, 300 units, B and C classes in Florida and Georgia, and primarily in Jacksonville, Florida. That's pretty much all we do. And then we do a couple other alternative things as well. But I think people, they can kind of focus on all sorts of different things. So I think the focus is good. And then I was going to ask you as well, is there anything that we missed as far as just, obviously, what you do as far as the vineyard stuff seems pretty simple, but is there anything that, like, when it comes to learning about new asset classes, because I think there's a process there, right? It's something that, okay, this is, I normally do this and this is kind of different, but it's kind of the same. So obviously there's the projections, but is there anything else, like when you're looking at a new asset class, like I know you said there's something you're doing with timber and land, and there's something that's new for you. What are some kind of, you mentioned the operator being really important, but anything else that you'd say, hey, here's a good idea to do this before you invest in something like a new asset class for as an individual?
I mean, I think, obviously everybody can say they've got conservative underwriting, but I always like to make a list, like what's a full list of all the contingency and hedges that are in place. And because my dad, I watched him trade the markets for many years, manage money. I was in the financial education space and we were teaching that. And even in the markets, when you're actively trading Forex, futures, options, whatever it is, you're not going to be right. Not even 50% of the time. Sometimes it's less than that. But if you can manage your losses, you can make money long-term consistently. And I feel like it's the same in any investment. The number one rule is don't lose money, or at least mitigate your risk. So how do you mitigate your risk in your investments? And I think asking every operator, what's the biggest risk in this investment? And I always bring that up when I talk to investors, meet them for the first time, and they want to join our investor club or get involved in what we're doing. I always ask them, what are your biggest concerns? Like, can we talk about that? What are your concerns? Can we talk about the risk of what's involved here? Because we've been in the financial markets long enough to know that, there's risk in everything. So how can you mitigate it? As an operator, being able to make a full list of what are all of our hedges and contingencies, because it is a game and it's a puzzle. Okay, if only 3 of these have to work out of this list of 10 or 11, we're going to hit our pro forma. But if 10 out of 10 have to hit, that would make me nervous as heck, which is why you don't see us acquiring a lot of deals right now in the markets that we're in, the smaller markets, Bronson, but we've underwritten a lot of things, and 8 out of 10 things would have to hit to make these deals work. And that's just not a risk we're willing to take. So what's the list of contingencies? How realistic?
You mentioned rule number 1 by Warren Buffett, right? Rule number 1 is don't lose money. And rule number 2 investing is don't forget about rule number 1. And so it's like, just whatever you do and all your investing, no matter what you invest in, if you just don't lose money, you're gonna do pretty well. And I think that it's not that you're never gonna lose any money. It's just that being aware of the downside risk is much more important than the upside potential, I think. And I guess something a lot of people don't consider. What are some, I think we kind of talked about this briefly before in the green room before we started, but I imagine having a vineyard, we're talking about biblical plagues and all kinds of things. What's kind of the realistic thing that could happen that you're the biggest risk as you look at that investment, or some of the things you guys look at, I guess, where it comes to vineyards?
There's no frogs when we talk about plagues.
Gnats and frogs. No water turning into blood. Okay.
There's no water turning into blood, thank God. We don't have a swarm of locusts. But Yeah. I think with any crop, you're going to have concerns about weather related risk like hail. And we do get a lot of hail out in the high plains AVA. But the way that our grapes, just the canopy of how our grapes and the trellising works, a lot of the grapes are covered by the leaves. So you've got a lot of plant material above the grapes, which does mitigate some of that risk. But we do, we factor that into our plan and our contingency. You might also think about tornadoes. I know y'all don't get those in California, at least I don't think you do. I think it's mostly earthquakes, but if a big tornado were to come through and wipe out 50 acres of the vineyard, that is something that we have to think about. One aspect that's really unique in this world is we buy crop insurance, and we pay a lot of money in crop insurance. We're paying premiums that are more than $500,000 a year in crop insurance. So that covers our income for that year. If something catastrophic happened and the entire vineyard was wiped out, which if a tornado came through, it would just tangle up the T-posts and the wire and the trellising, but our income would be covered. It would not help the wineries that need the grapes, but at least our investors are covered in that regard. So we are grateful to have crop insurance factored into our pro forma that covers disease, weather-related risk. You don't really get a lot of fires out there. There's literally no trees out there. It's just flat as flat can be.
Right.
So we don't get a lot of fires out there.
But
no,
that's
insurance.
Yeah. That's interesting. Yeah, we don't have to worry about that in California. Not so many twisters, but we do have our earthquakes, and every area's got their own thing. And fires have been a big issue here as well lately. Awesome. Well, I really appreciate you coming on and talking about this. I'm sure it's added a lot of value. I know it's added a lot of value to me into this conversation. I'm actually going to look more into it as well. But I appreciate just every time I see you, Keeley, you're always, cheerful. You're always looking to add value to people. It's very evident what you do. And I just appreciate that. I think that, having that abundant mindset and really being somebody who adds value to people, I wouldn't say it's, you see people with it, but it's always refreshing when I see that. And when I see that in you, it's really great. So, because it's not necessarily the norm. I had a story the other day where I was like, oh, this is not what's going on in real estate here. So really appreciate that you bring that. What's the way that people can get in touch with you if they want to reach out?
I would just say our website, hubbardcapitalgroup.com, is probably the easiest place. And of course, like social media, you can find me on all the platforms, and feel free to just shoot me a message. I love to chat. I love to chat investing. And I appreciate you, Bronson, for having me on. And I feel the same way about you every time I see you. You're just a bright light. Like, people are drawn to you. And I know that's for a reason. So wishing you all the success as you continue to source amazing opportunities and grow your investor community. I know they're grateful to have you too.
Awesome. Well, thanks so much, Keith. Thanks for saying all that. I appreciate it. And thanks for coming on again today. It's great. And we'll have to have you back again in the future, and whatever your new investment thing is. So that'll be exciting.
Yeah, would love to. Thanks, Bronson.
Okay, so this was a great interview. I love talking about different types of asset classes, and I geek out on this because, again, there may be times where multifamily is the best thing ever. There may be times where investing in ATM machines is really great, or doing self-storage, or vineyards, or venture capital, or patent funds, or there's all kinds of things, Bitcoin mining funds. So I think it's important as an investor that you're educating yourself on what's out there, because then you can compare not just multifamily deals to multifamily deals. You can compare a multifamily deal to a vineyard deal. You can compare it to other types of deals, and it gives you really, the comparison is, what does this actually do for me, right? What does this investment actually accomplish for me? Does it give me more cash flow? Does it have a good, time horizon? What I liked about this type of opportunity was that it's a very long time horizon, and you actually own the land, which is great. So you have it, like she said, a legacy play. So I like that kind of thing. That's a very unique thing that I think I haven't really heard about too many investments where there's that type of legacy syndicated investment. So anyway, I hope you took some time, took some notes, took some effort to pay attention to what's happening here. If you're not actually introduced to the group that these guys work with, it's again, we mentioned them in the podcast a couple of times. There's a show called, his name is Mark Kenny. The group is called Think Multifamily. They have a really great group. They do a couple events a year. I'm going to be at the Fire Summit in December in Dallas, which is great. If you live in Dallas, even if you don't live in Dallas, Dallas is the place to be. It's going to be in December, and it's a great in-person event that's talking about multifamily stuff. And again, I will be there. So anyway, thanks again for taking the time to educate yourself. Look forward to seeing you on the next episode.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report the single best investment strategy during and after a pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.